All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to go through a company called Bitfarms, stock ticker BITF. These guys are a Bitcoin miner, and for those of you who follow the channel, you know that, and we cover Bitcoin and the Bitcoin miners quite a bit. So if you're new here, please hit the subscribe button and the notification bell, and everybody do us a favor and please smash the like button, and feel free to drop a comment below. You will also see in the pinned comment a link to our free Discord. So enough of that. I want to talk about Bitfarms today because they released their fourth quarter earnings and their year-end earnings for the year 2021. I want to go through those and take a look at what's going on with Bitfarms, and then we'll take a look at the chart. I think when we go through this, you're going to see this is good stuff. Let's start with their press release. Okay, Bitfarms reports revenue up 426% to $60 million for Q4 of 2021 and up 388% to $169 million in 2021 versus the prior periods. Mined 3,453 Bitcoin in 2021 at an average cost of $8,100. So I'm going to dig into that more later because there's mass confusion on how much it costs these companies to mine a Bitcoin. So I'm going to talk about what that number means and come up with a total number from a cash basis to show you basically what it takes to leave the lights on. Net income improved to $10 million in Q4 2021, up from a net loss of $5 million in Q4 2020. Adjusted EBITDA increased to $44 million for Q4 2021, up from $4 million of Q4 2020. Now that's $44 million on what you're going to see was $59 million of revenue for the fourth quarter. So that is an exceptional number. Bitfarms mined 1,045 Bitcoin at an average cost of production of $8,000 per Bitcoin. For the full year of 2021, they mined 3,453 Bitcoin at an average cost of $8,100. So their cost was down a little bit in the fourth quarter versus their average for the year. Okay, we drove growth by increasing our hash rate 131% in the year 2021. And we estimate that we expanded our market share from 0.6 share of the Bitcoin network to 1.2% share from year-end 2020 to year-end 2021. So they increased their hash rate by 131%. They about doubled their share of the overall worldwide hash rate. So they're a little over 1% according to their calculations. And they have significant plans to grow in 2022. As of March 25th, our hash rate is 2.7 exahash per second. That's up 23% for the year to date. And again, that's only through March 25th. So they're already increased their hash rate by 23% in the first just about 3 months and continue to outpace the Bitcoin network's 20% growth over the same period. So they are growing faster than the network is growing. So that means that they should be mining more Bitcoin per month over time. And I think you're going to see this is about as close as it gets because they will start growing at a much faster pace than the overall network if they can execute their plan for the rest of the year. With 8 farms currently in production and a total of 10 planned to be operational this year, we expect to exceed 3 exahash in early April. So that's just a few weeks from now, and are continuing to work towards achieving our target of 8 exahash by year-end 2022. So that's quadruple. So obviously the worldwide hash rate will not go up anywhere near that amount. So as a result, they should mine significantly more Bitcoin in the year 2022 than they did in the year 2021, once again, if they can stick to their plan. Increased gross margin to 84%, up from 82%. Improved adjusted earnings before interest, taxes, depreciation, and amortization to $44 million or 74% of revenue. So their EBITDA is 74% of their revenue. That is just out of this world. And that's up from 32 million or 71% of their revenue in Q3 2021. The bigger they get, theoretically, the higher this percentage should get. At December 31st, we held 126 million in cash and 3,301 Bitcoin, valued at approximately $153 million. And that's based on a Bitcoin's price of 46,300. We know that it's a little bit more than that right now. So they had working capital of $186 million. They secured a $100 million Bitcoin-backed credit facility, and you'll see at the end of the year, they had about $60 million outstanding on that facility. On January 6, 2022, they purchased 1,000 Bitcoin for $43 million, adding to the BTC Treasury holdings. On February 24th, they entered into a $32 million equipment financing agreement. So lots of activity even after the end of the year. The biggest takeaway from this is they're at 2.7 exahash already this year. That's up 23%. They expect to be at 3 exahash over the next few weeks, really, and they expect to end the year at 8 exahash. Okay, I just want to spend a minute showing you the income statement. This is how they have to report this in accordance with generally accepted accounting principles. However, it is extremely confusing. So I want to go through this, and then I'm going to show you my analysis that kind of takes a shortcut and I think makes more sense. So for the 3 months ended December 31st, this is their fourth quarter performance. They had 59.5 million, so they're saying $60 million in revenue. Their direct cost of sales was $20,613,000. That leaves gross profit of $38,985,000. Their gross margin is 65%. So that is very good, but I'm going to break that down as well because it's actually, in some ways, it's actually a lot better than that. They have a bunch of non-cash or one-time only, non-reoccurring things that I don't consider business as usual. In other words, their operations are mining Bitcoin. So things like gain or loss on disposition of digital assets or loss on revaluation of digital assets, those are paper entries only. Nothing's actually happened. They just have to report that on their financial statements. So after all of those things, they're showing an operating income of $15 million, and that is an operating margin of 25%. So that would be very healthy and very strong. But when you dig a little deeper, you'll see they're actually doing even better than that. Then they put a few numbers below the line, and these are non-GAAP numbers. Gross mining margin, 84%. So I'm going to show you what they mean by that, because remember, their gross margin was 65%, but they're saying their gross mining margin is 84%. EBITDA was $29 million. Adjusted EBITDA was $44 million, or 74% margin, which is, again, outstanding. I'm just going to quickly go over to my sheet and show you how I pulled these numbers apart to try to make sense out of them. Okay, I'm going to start with this column right here, and you'll see these numbers all tie back to the numbers we just looked at. Revenue was $59,598,000. Cost of sales was $20,613,000, so that was 34.6%. So here's your gross profit of 65.4%, again, which ties back to their financial statements. They then have general and administrative costs of $18.9 million. That's 31% of revenue, and this puts into perspective because one of the main questions that I get is, what's the cost per Bitcoin? How low until these companies can't operate anymore? Are they going to go out of business? And I think you're going to see Bitcoin could absolutely nosedive and these companies would still be cash flow positive. As I've taken a few of the non-cash items like the gain or loss, the unrealized gains and losses on cryptocurrency and that kind of stuff, I come up with $20 million from operations. Again, this all does tie back to the financial statements. I'm just taking some of the lines out that are not cash. Okay, this column I show in specific. There's two very large numbers that are non-cash. So they're actual expenses. They have to expense them, but they require no cash whatsoever. Depreciation was $10,287,000. Obviously, that's a non-cash event. The cash event is their investment when they buy the equipment. Then they have to depreciate it over time. So this is not a cash out number. In other words, if they had to stop buying equipment today, their equipment expense would be zero on a going forward basis, but they would still have to depreciate the existing equipment that they have, so that's non-cash. The other gigantic non-cash number is share-based compensation. For the fourth quarter, that was $10 million. Then I break out their direct cost of sales. When they're talking about their cost per Bitcoin, they're talking about energy. So this one line is what, when they say it's $8,000, that's what they're talking about. They had other non-energy related direct costs of just under $2 million, and then they have depreciation expense, which is a non-cash cost of $10 million. So this is kind of the breakout. This is where you'll see gross mining profit. I think they include this in there, and that gets them to their 84-ish% gross mining profit. But they end up with cash equivalents of $40 million on $59.5 million of revenue. This is an extremely healthy profit equation. I think this will continue along this way, if not get better, in my opinion. Let's take a quick look at the chart. This is the Bitfarms chart on the one-day time frame. So I wanted to show you, basically, Bitfarms hit a high back on November 10th, which was one day after Bitcoin hit its all-time high of 69,000. So they were trading over $9 per share at that time. Through the rest of November and December, they were down pretty much in a straight line. Since January, they've been kind of bouncing off the bottom back up to this line. This white line is their long-term line of support. That was their September 29th low, which was when all the Bitcoin miners hit their low after the September bear market. So you'll see they're only just now catching up to that, even though Bitcoin's at around $47,000, and at September, it was at about $41,000. So Bitcoin is much higher than it was back then. Bitfarms has much more computing power than it did back then, but they're still struggling to cross this line. And you'll see what was support has clearly turned into resistance here. We're right on the line right now. So I think that if Bitcoin can continue its momentum, in my opinion, Bitfarms has a few obvious price targets. I think $5 and $6. They were up over $5 in January. So that would be my first price point. And then on December 27th, when Bitcoin hit $52,000, and again, we're at about 47 and change. We were as high as 48 yesterday. So we're only about $4,500 away from that. So when Bitcoin was at 52,000, Bitfarms was at $6. So to me, this would be a minimum of where it belongs, in my opinion, once Bitcoin finishes getting healthy. So if we do the math on that, that would be a 45% increase from where Bitfarms is trading right now. So again, this is not financial advice. This is how I'm looking at the charts. You guys have to do your own due diligence and decide what all this information means to you. But in my opinion, this is a reasonable price target over the next 3 to 6 months. If Bitfarms could get back to its all-time high where it was in November, so not that long ago, that would be a 122% increase in the price of Bitfarms stock. So I think that's a realistic 1-year target. Again, none of this is financial advice. We don't know what's going to happen. I'm bullish on Bitcoin. I think the risk reward on Bitfarms is very positive in my opinion. So please use your best judgment and invest wisely. Thanks so much for watching. We'll see you in the next video.